Boom! What's going on, guys? Welcome into your Energy News Beat, episode number 153, here on this gorgeous Thursday, November 5th, 2020. I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado. Joined as always by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. How you doing today?
It's a beautiful day in the neighborhood, and we are still wondering who's president.
Yeah, it's kind of the leading sentiment today. We're still on day three, sort of that. So we'll cover all of that and how that's affecting the overall equities markets on the oil and gas earnings side. Holy smokes, Stu! Apache, Pioneer, EnLink, friends over at Goodrich, Geopark, natural gas inventories dropped today. You've got some stuff in the international news desk. We are completely busy, but first, as Stu mentioned, we have to start with what's going on in the equities market, and really what's driving that is the presidential election. Right now, it's leaning President Biden in terms of how the polls are looking for the overall presidency, but the House is looking like it's going to stay Democratic, but the Senate looks like it's going to stay Republican, meaning we're going to have gridlock, and that is generally good for markets. All indices were up big today. Just to give you an idea, top line indices, SPY up 1.75 percentage point, tech stocks were up 2.5 percentage points, Dow Jones was up 1.75 percentage points. The quote out of Lindsay Bell, who's the chief investment strategist over at Ally, it looks like we'll see a split Congress, which based on historical volatility levels has been a preference of the stock market. You can see an expectation being priced into the market Wednesday when you look at both the healthcare, communication services, technology, and as the major stocks leading it. So, from an equity standpoint, guys, conveniently, with the way things are shaping out on the election, indices are up. When we move over and look at the crude oil side, fairly flat. It was down about 1.5% today. Really kind of just almost a market pullback from what has been an insane rally. We saw $34, at some point last week, rallied all the way to 39, settled back in. Like I said, front month currently trading 38.42, back into the curve 41.43. Natural gas down 3.5 percentage points off a less than expected decrease in the natural gas inventories, $2.93, back under $3, back into the curve now 303. XOP, which are E&B securities, only 0.75 of a percentage point on the upside, so kind of lagging major indices. OAH, which are oilfield services, outperforms XOP 1.3 percentage points, 102.82. On the downside, couple companies, Parsley Energy, it was down 4.5 percentage points. They'll be off the stock market soon. WTI Offshore, they were down 6.5 percentage points. And Comstock Resources, who reported earnings last night, not good, down 12 percentage points. Still some hope on the upside, though. Don't get me wrong, guys. Katura Energy up 8 percentage points. Gulfport Energy, don't get in on them. They were up 8 percentage points off some weird bankruptcy. Sandridge had a great quarter. They're up 23 percentage points. Dropped earnings last night if you didn't follow them. We actually got some free cash flow in there, which was pretty good for their Valkens Mineral Corp. Of course, mineral companies are going to be up. But before we dive into the news desk, guys, this show is powered to us by Data Gumbo, which is an award-winning technology company with customers around the world who build and manage and automate their own smart contracts. These smart contracts from Data Gumbo offer a wildly new approach to the commercial relationships, one that reduces the friction, delivers streamlined operational, transactional, and cost certainty and savings. Every transaction is secured on the blockchain via their Gumbo Net. Guys, just check them out, www.datagumbo.com. We love those guys over there. Stu, what do you have in the international news desk for us today?
Hey, doing great. Hey, I love the guys over at Data Gumbo. Andrew Bruce is the CEO, and their marketing team are just second to none. All right, first one. We've got a rumor mill going on, Michael, and it is total. We got Total. Shh, don't tell anybody. Total looks like it's selling its stakes in a number of oil fields in Angola. I was at least under the impression that they were going to be keeping those, but it looks like, and I find this kind of odd, that the summary that they're looking at is they need to get rid of 200,000 barrels per day by 2025. I think they could do that by just taking out the trash. Okay, moving on to Iraq. Our buddies over at this article is on the news desk. It's Iraq exceeded its OPEC plus output ceiling last month. I know, don't fall out of your chair. Don't be just totally shocked. But I put it in here and said, you have to feel sorry for the leaders of OPEC plus and OPEC. They're doing the best they can, but they got a puppy that they got to smack in the nose with a rolled up newspaper. Okay, OPEC plus, and I guarantee you they are going to be hitting their oversupply again. Uh, 200,
Interesting. Well, they'll be hitting the oversupply. You said what, 200,000?
yeah, 242,000 again. And they apologize. Now, the interesting nugget in that article is they apologized for constantly going over quota. Okay, I'm good if
I don't
they
know if
don't.
I've ever heard an apology out of OPEC, so that's interesting.
Okay, next one is we've got a great article, and oil path is coming up on the recovery. Let me give you a couple nuggets out of this one. Jet consumption, jet fuel, worldwide jet
It's
fuel,
got to be down. Got to be down, I bet.
running around 7 million barrels per day, according to the U.S. Energy. In that, on total, 5 million barrels was attributed to passenger services, with 2 million on this domestic routes and 3 million on international ones.
Okay.
Cargo was the other 1 million. Okay, freight rebound. It looks like the air freight is rebounding faster than the airline passenger, so that's good news.
Is those
So
numbers are historically down, though, I'm going to assume, right?
yes, those are historically down. The number for flight rebound, the only number up that was in there was cargo. So we like that, Michael, and back to you.
Holy smokes. And, cargo's up because everyone's buying Amazon Prime. It's, stimulus round 2 coming up. We're going to see a lot of those Amazon flight jets. I got a can opener off. Do you want to know why Amazon's winning, Stu? This is why Amazon's winning, because I bought a can opener off Amazon. When did you think that's something historically people bought in the store at Walmart? I go on Amazon to buy that now. I'm outside taking a little break before we do the show. Guy delivers it to me in one day. It's unbelievable, the transactional value. So it makes sense, but we get askew. Let's move back.
Was that a beer opener or a can
opener?
Oh,
I bought soup the other day and realized I didn't have a can opener. You should have seen me struggling with a knife trying to just get this can open. It was pretty brutal. I'm glad I didn't slice any of my fingers off. As we move over into the U.S. shale patch, guys, we got a bunch of earnings, as I mentioned. But first, let's just go natural gas inventories, guys. There's down. We're expecting a draw of about 20 BCF. We saw, a net decrease of 36 BCF, expecting a little higher than that. Markets didn't necessarily like any of that, down 3.5 percentage points. Also, for the fact that it looks like the forecast is going to be a little warmer, which is going to decrease net demand, which obviously brings down natural gas prices. So currently trading at $2.93. When we dive into the earnings here, there's a couple of them. Let's go ahead and start with Apache. Not good. They were, not terrible. They were pretty much flat. The big nugget out of this, though, is that the CEO came out and said this, Stu. The company, here's the quote. Apache's CEO in his costs, he's prepared to cut costs if oil prices remain low. When I hear that, I hear G&A, unfortunately. I mean, we all know Apache's not doing great financially, but when you got to come out in your conference call and specifically say you're prepared to cut costs if prices remain this low, that's a sign to investors that you're willing to cut G&A when the time comes. So
I'm shocked. I don't know what to say. That's wow.
You play a great fake sarcasm, Stu, because I think everybody saw this coming from a mile away because you guys give an idea here. The company reported a net loss of about $4 million, which, remember, that's GAAP losses. So if we scroll down here and actually get what some of the actual information here, let's give an idea. The actual loss was about The actual loss was about 27 million. But to give you an idea, they had about revenues about 1.04 billion, down about 400 million. But net losses, so revenues were 1.1 billion. Really, what the street's seeing and why their stock was flat was good revenues, but it's just when you got the CEO coming out and saying we got to cut costs if oil's this low, that's a sign that the only way they can grow is by cutting some of this G&A. So that's not good. On the other side, let's go ahead and look at Murphy Oil, guys. Not good on the revenue side. Offshore driller, $244 million loss, or about 1.5 distributed per diluted share. Street didn't like it, down 5.0 percentage points. On the midstream side, though, 10.5 percentage points for EnLink. They're up to $2.89 after delivering $98.7 million in what I would call true free cash flow. They reaffirmed their huge borrowing base and adjusted their EBITDA guidance upward from $825 million to $900 million to $950 million to $1.02 billion. Everybody else is rating their guidance down. Midstream ramping it up. Speaking of other companies that did well today, Geopark Energy earnings, or it's not Geopark earnings, they're out 3.4 percentage points on the upside off of, let me Stu, get this. These guys talk about South American Edge, $290 million of cost reductions, and they didn't have to lay off a single person. Revenues of $98.1 million, adjusted EBITDA $56 million in quarter, operating profit of $28.5 million, and a net loss, which is what I call a true net loss, of only $4.3 million. They were able to reduce their capital expenditures by 56 percentage point and able to lower their cost per BOE. Gotta love James Park over there. He's the CEO. We love them. We love them guys over there. South America is a watch. I wonder if they'll be involved for the Angola stuff. That could be right up their alley. Let's move over to Goodrich, another natural gas player. As we mentioned, Comstock reported earnings yesterday. Did not do well. They're down 12 percentage points. Goodrich up today, though. Lisa, they're up 5 percentage points, really off the back that their borrowing base was reaffirmed. Their earnings isn't, I think, the best. When you kind of look at some of the top line stuff, revenues were 21 million, down about 6 percentage points from last year, which is interesting because natural gas prices have gone up. I think where the street's liking this is the fact that their borrowing base was go ahead and reconfirmed, which is good. And that has the potential then in the spring to go ahead and to be a little bit bigger and reaffirm. So that's what the street liked it there. They're up 5 percentage points. Pioneer, they're down 4.5 percentage points after losing about what is their loss here? I think they lost about 200 million. I scrolled down too much.
What they lose?
Net loss million per diluted share. Excuse me. I didn't want to say. I knew it was 20 or 200, but net loss of 20 million in terms of non-GAAP. And when you kind of dive into the numbers here, here's the numbers that I like to look at. When you scroll down their current assets, they have about 1.3 billion cash on hand. A lot of that is going to some of that's going to be liquidated as they move to pay down debt. But really, the big number is their revenue from oil and gas was down from 1.2 billion to 922 million. But let's give an idea, Stu. It cost them $1.8 billion to operate all of their assets. They only make total revenue $1.8 billion. So they're basically breaking even on a revenue standpoint before they even get into the G&A. So like I said, Street didn't like it. They're down 4.5 percentage points, but they moved to acquire Parsley. It'll be interesting to see how this move with acquiring Parsley comes out. Really these big integrated players, it's going to be very interesting to see how all of this stuff rolls out. Looks like markets are closing right now. So oil closed at about 38.50. Stocks end up closing, final numbers on SPY 1.94, 2.2 percentage points on Nasdaq, Dow Jones 1.9 percentage points. So I mean, green all around, Stu, in light of we don't still know who's going to be the president. You got anything else for the news desk today?
No, it's just we are so busy.
It's been busy. But with that, guys, we're going to go ahead and get out of here and let you guys get back to work, finish your debate. Thank you for checking us out and filling us in on your energy news beat here on this gorgeous Thursday, October 5th, 2020. For Stuart Turley, I'm Michael Tanner. We will see you guys tomorrow for another.